Welcome to the TaxSlayer Pro Basic Income Tax Preparation course. This is Module 13. We're covering the Payments section for filing 2018 tax returns. Now new for 2018, lines 65 through 75 on Schedule 5, one of the new schedules, Form 1040, handles the other payments and refundable credits that show up on the 1040. We enter these on Schedule 5 and we include them on 1040, line 17. Line 16 through 18 now on the new 1040 include your federal income tax withheld from your W-2s and any taxes withheld on your 1099s. There are two ways to pay your income taxes as you earn income during the year. There's withholding, which of course is the amount withheld by your employer, and it's paid to the IRS in your name, and you indicate this on your W-4. And there's estimated taxes, usually paid quarterly, and usually by those who are self-employed, paid quarterly by the taxpayer and mailed directly to the IRS. And there's a form that typically accompanies these payments, a 1040-ES. Quick look at the W-4. Now the amount of tax your employer withholds depends on the amount you earn and what you put down on your W-4. Here's an example of a W-4. The total number of allowances you are claiming is very important. If you claim 0, your withholdings will be greater on each paycheck. If you claim 1, your withholdings on your paycheck will be less. So in other words, as the number of allowances go up, your withholdings on each paycheck decrease. Estimated taxes, again, are typically paid by self-employed individuals, and the payments are sent in with a 1040-ES or estimated tax voucher. And generally, as I say, self-employed people pay estimated quarterly tax payments. And also, those who make their livings with rental property, dividends, interest, and pensions may pay estimated taxes to offset their burden at the end of each year. Payments on your tax return can come from federal income tax withheld from Forms W-2 and 1099s, estimated tax payments and amounts applied from a prior year's return, an amount paid with a request for an extension to file, excess Social Security and Tier 1 RRTA tax withheld. And taxpayers who overpay can apply all or part of their refund to meet next year's tax burden. Form 4868, the application for automatic extension of time to file U.S. individual income tax return, extends the time to file typically until October the 15th. Form 1040, Schedule 5, line 71, again this is new for 2018, the Schedule 5, line 71, includes the amount paid with request for extension. An extension must be filed electronically or on paper by the due date of the return. If taxes due aren't paid by April the 15th, typically, that's the last day of filing season, taxpayers may owe interest and penalties. In regard to excess Social Security, a taxpayer with more than one employer may have a combined income over the amount for the Social Security wage base, resulting in overpayment of Social Security tax. And again, typically you'll see this in a taxpayer who has more than one employer. The excess amount is entered in the Payments section of Schedule 5, line 72, and is a refundable credit. A little bit out of our scope for this course, taxpayers who claim any of these credits, Form 4136, the credit for federal tax paid on fuels, Form 2439, notice to shareholder of undistributed long-term capital gains, and Form 8885, the health coverage tax credit. You may run into these somewhere during the tax season, but again, these forms are a little bit out of our scope. So in summary, Annual payments to cover income tax obligations can come from tax withholding throughout the year, reported on a W-2, quarterly estimated taxes mailed directly to the IRS, along with Form 1040-ES, and an employee generally fills out Form W-4 at the beginning of his or her employment to determine the amount that will be withheld from each paycheck in order to fulfill the income tax obligation. And generally, self-employed individuals pay estimated quarterly tax payments. A taxpayer with more than one employer may have a total income which is over the Social Security wage base, and this will result in an overpayment of Social Security tax and a refundable credit. And now let's look at some review questions.